What's up, guys? It is Sam here, and I wanted to talk about Netflix second quarter earnings report, as well as how that impacts my portfolio and options trading at the end. Netflix came out with their earnings Q2 report today, and I've read through their shareholder letter as well as listened to Reed Hastings and other top executives in the company and what their thoughts are on going forward. So I wanted to talk about that. Took some notes, just finished up. It is 9:23 on July 17th. But now, with that being said, if this is your first time here, what's up? I'm Sam. Welcome. And if you're returning, it's good to fucking see you. Okay, so Netflix, probably all heard of them. So this first part is just complete conjecture. I am bullish on Netflix. I do not own any shares. By the way, nothing I say in this video should be construed as financial advice for you. You should do your own research. I'm not sure what's going on with that light back there. You should do your own research on this, but my personal opinion, I took some notes on here, so this is just conjecture for the macro of why I am bullish on, and this is just, I'll make this really quick. I just put down 3 points here. Internet usage is going up. The amount of time that people spend on the internet is going up. The individuals spend more time on the internet today than they did 2 years ago. And in 2 years from today, they're going to spend more time on the internet than they do today. Internet speed is increasing on average. So this is, think of global, right? Netflix has over 150 million subscribers globally. And maybe you think that your internet is fast where you are, but some people in other countries don't have that luxury. So on average, the global internet speed is increasing by those local areas around the world. So the global average is increasing. The reliability of the internet is increasing. So not only the average speed is increasing, but the reliability of the internet is increasing. And I'm sorry I said it was 3, but it's actually 4. And the adoption of the internet continues to grow. So more people use the internet every day who've never really used it before. So you have more people on the internet coming online. Those people that are online are using it more. The speed at which people can do things. Think about like when we used to have 3G and how bad it fucking sucks when your phone cuts from LTE down to 3G. It blows, right? So think about having 3G all the time and then going to 4G, how much of an impact that is. Now think about the same thing from LTE to 5G, where it's actually a multitude better than that, and the speed maybe going from 30 to 50 megabits per second to a gigabit. Like, it's tremendous. Anyways, those are some personal views on that. Now, some of the things that Reed and other executives, first of all, let's just recap some of what was in the shareholder letter. They missed a lot of the pundits in the media and the legacy players like to talk about the membership growth, which is understandable. They forecasted 5 million in quarter 2, and they came in at 2.7 million subscribers. This is the net adds. So it puts them over 150 million, 151.5 roughly million subscribers. That's tremendous in terms of the global subscriber growth. Their expected growth for the year 2019 on net additions is greater than 2018. So the absolute amount of subscribers, I think in 2018 was like 27 million or something like that, or maybe over the last trailing 12 or something, it was around 27 million. They're expecting to do over 28 million That's tremendous. When you think about the growth on that, that's close to 20% growth on a not so tiny little base. And you have new people coming online all the time. So that's interesting. They missed their forecast number. So their number that they release is the number that they use internally within the company. That 5 million forecast is the actual number that they use within the company. It's not propagated to just release to the media. That's the actual internal number that they use. And so I have a chart here, and if you look back, I looked back at 2016, 2017, 2018, their forecast versus actual. And it's kind of interesting. So over the last 4 years, right, 16, 17, 18, and 19, quarter number 2 has 3 out of those 4 years they've missed. So over all that time period, right? So we've got 12, 13, 14. Out of 14 forecasts, quarter number 2 in 16 was off. Quarter number 2 in 18 was off. Quarter number 2 in 19 was off. So there seems to be some type of dynamic going on where there's either a seasonality in Q2 or maybe it's summertime in certain markets, so people spend more time doing other things than they do watching Netflix, so less people talk about it, meaning less people sign up for Netflix. That's just personal thoughts on that. They also missed the only time within the last 4 years that they had another miss when their forecast differed from their actual in a negative manner was Q1 2017. So there could have been a big content push in Q2 2017 or something. I don't remember if that was when they came out and released to another 130 something countries or whatever, or another 100 countries or something. Anyways, I don't remember if it was Greg something, an executive in the company, was talking about the partnerships and how there's a tremendous opportunity with their partnerships. Oh, by the way, the revenue increased, revenue growth accelerated by 400 basis points, so that's basically 4%, to 26%. And operating income increased. This is sequentially year over year, it looks like, by 53%. And they're forecasting paid membership growth of 7 million new subscribers globally for quarter number 3. In quarter number 3 of 18, they had 6.1. So their growth rate in terms of subscribers, they're actually forecasting a larger number for quarter number 3 this year than next year. So by no stretch of the imagination do I personally believe that the growth rate in subscribers has started to come to a saturation point. I mean, if you think about it, 150 million subscribers is nothing if you figure there's, I don't know, a billion something people. I think it's higher than that, but there's close to, I think, around a billion people who pay for some type of cable or HBO or Netflix or Amazon type of thing globally. I think it's around a billion, excluding China. So when you look at that, right, that is potentially the market. I think it's a little bit bigger than that, but I think there's still a tremendous opportunity, because if you used a billion and they have 150 million roughly, that's only 15% of the market on a global basis, where I would expect that 1 billion to actually continue to increase as more people use internet for entertainment and less people use linear TV or just regular traditional old school TV. That continues to go down, more people will be using this, as well as those other 4 trends that I mentioned at the beginning. Remember, the number of people on the internet continues to grow. The usage of the people already on the internet continues to grow. The speed of the internet is continuing to grow. And the reliability of the internet is continuing to grow. So I think they're in a very good spot to see continued growth in the above 20% on an annual basis for their membership net ads. That's my estimate. Partnerships with cable type companies. This is what I think his name was Greg was talking about, one of the executives, is bundling Netflix with a cable bill so that people who purchase cable think of like how you can get cable and Stars or cable and HBO, but getting cable with Netflix and it's just included in that bill. That was, he said, a big opportunity because there's somebody like you who was watching this who maybe feels comfortable enough to go sign up through Netflix for a subscription. There's maybe your grandmother doesn't, but she feels comfortable enough to go through a cable company. So there's a whole new audience right there that they can tap into, maybe a different generation. One of the things that I think Reed Hastings mentioned, who is the CEO, that actually this was Ted, he's the guy in charge of all the content for Netflix. There's higher viewership penetration on a year-over-year basis. So with each new original piece of content or series or show or film they do on a movie, they see a increase in the amount of users that are actually consuming that content. And they got into some interesting strategy on what they're doing to potentially give people more information to make better decisions for themselves in terms of the consumer. If you've been following Netflix, over the last, I think it's in 2019, but it might have started in 2018, is releasing viewership numbers for content that's created, because some people want to watch what other people want to watch. They want to know what's trending. They want to know what's trending like on a global basis, and they also might want to know what's most popular in fucking Massachusetts, right? So I think that's a very, very thoughtful and interesting insight into the strategy of how they're thinking about giving the users a better experience to be able to make a decision on what they want to watch. I think that's very, very interesting. I don't know of any other company like Netflix that even reports those numbers, let alone has had the thoughtful consideration of strategy behind reporting those numbers. Plus, some of that is interesting data for the actors, actresses, and the producers. Now, briefly, just on the actresses and actresses, how this is a little bit of conjecture, but it was also mentioned by Ted, who's in charge of their content, that actors are actually paid a discount. First of all, he mentioned, and didn't get into the specifics and almost like cut himself short. He's like, we want to pay, the equivalent of like what somebody would be paid if they were to produce a top film. We're talking about movie. Top film that wasn't on Netflix and was released in movie theaters and whatnot, and then he kind of like backtracked and then just kind of cut it off, or somewhere thereabouts, and it was more. It seemed like he was like trying to say, in a sense, like, well, we want to pay as little as possible, but we also want to be on a relatively basis, and some of the benefits to the actresses and actors is getting the guarantee versus a revenue share, which some other companies do to push the risk on the actors or actresses. If you don't know what I'm talking about, traditional film, there might be a small amount up front that the actor receives or actress receives, and then they get a revenue split based upon how popular the movie is. Versus with Netflix, they get a guarantee for their income, and they get paid out more quickly, because if you have a tiered release for a film, which happens quite often, meaning that if it's a U.S. film and it gets released here, and then the following weekend it gets released across Europe, and then the following weekend is Asia, and then the following weekend is India. There's a tiered release of this over time, and that takes several weeks to play out to realize in terms of actual numbers what the revenue would be from these movies, so that they can get split with the actors and actresses. So Ted mentions that because of they're able to pay out more quickly, meaning you don't have to drag it out for several months, and they guarantee the pay instead of the movie has to be so popular for them to receive any money, or to receive a certain amount of money, that they are able to actually get a discount from what actors and actresses might make for working with another studio, which I thought that was kind of interesting. So that could be a competitive advantage for certain people. Think about how people discount. Once you study finance and the psychology of how people discount funds in terms of the time value of money, and it's because it's a little more complicated. There's the psychological side of it, but then there's also the time value money side of it, and people don't do a good job of valuing the future dollars that they would receive, and they can take a substantial discount if they are offered that money today. Think about somebody who might receive $10,000 or say $100,000 in some future period, say 5 years down the road, or something like that, versus if they were to say, hey, well, we'll give you $65,000 today. You don't have to worry or wait 5 years down the road. You get $65,000 today. So I think that gives Netflix a tremendous discount that is not really talked about in terms of actually reducing the production costs if you include the actors and actresses in the production costs. So I thought that was super interesting. So they also briefly talked about the content that is coming off of Netflix over the next several years, and that any one studio, I believe he said studio, but he might have said one piece of content. But I don't remember what exactly was said. So take that portion of it as not 100% accurate. But whether it was a piece of content or content from a specific studio, that every single one of those represented only very low single digit in terms of viewership. So the news articles that come out and say that, oh, Friends or The Office or some other TV show that people enjoy watching is coming off of Netflix, and that's going to affect Netflix negatively. I don't remember the gentleman's name. I think it was Greg had mentioned that these shows or studio groupings of content only represent small single digit viewership of all of the viewership on Netflix, which indicates the diversification of not being over reliant on one studio for licensing content. That was interesting. Lastly, I wanted to touch on Ted. I don't know anybody's last name, but Ted had mentioned that they had originally not been investing into animation, and they are heavily, he mentioned it twice actually, they're towards the beginning and then towards the second half, they're heavily investing in the animations didn't get into any of the details of what that was, but he did say the investment into animation should start showing some, I forget the exact verbiage he used, but showing some results essentially at the end of this year or beginning of 2020. So that will be interesting to see how that comes out, because some of the animated stuff that can come out allows for a different type of storytelling that I think that arena is still growing, especially as animation quality continues to get better. Now, with all of that being fucking said, let's jump into my portfolio to wrap this up. By the way, if you want to see more of this content, don't forget to press that subscribe button and share this video with somebody. If you know somebody who might enjoy this type of content or this type of analysis, share this video with them. It helps the channel out. Don't forget to press that like button as well. So, what is going on with my portfolio? I do not own any shares in Netflix. I do trade options in Netflix. So I have a Netflix put credit spread 325 to 320, and I have 2 contracts. So the maximum amount I can lose on this is $1,000 because I have 2 of them. So the delta between those 2 spreads is $500 or $5, right? Times 100 shares. Each option is based on 100 shares, so I can lose $500 per contract, and I have 2 contracts, so that's the maximum that I can lose is $1,000. The premium that I collected was $90, so the maximum I could lose would be $910. It looks like I might be close to that number, $910. If you look at what happened when the numbers came out, 2.7 million subscriber net adds. This came out after the market closed, so I wasn't able to listen to it real time. But there was a substantial sell-off in after the bell and after hours trading, and Netflix lost $36, so from about $363. This week has been trending down. I should have seen this coming, but there was a $36 sell-off. So it finished after hours trading at 319, which would mean that I have the maximum amount of loss that I can receive here. However, there's a little bit of time value, so maybe a $875 loss. But we will see how it plays out in the morning. This option expires on Friday, which is the 19th, I believe. So basically 1 day of trading, and